Hello, you're watching Proactive London. I'm joined by Jacob Carter, UK country head of Farmeye Holdings. Jacob, today we're discussing whiskey and casks. Why invest in casks?
Well, it's a great thing to invest in. I mean, we've just finished our Q2 whiskey auction for casks only, so it's kind of prompted me to maybe give out a little bit more information of why it is kind of a good opportunity for people to start investment in casks. Now, the chief attraction, I would say, of investing in casks is that typically a good quality liquid will become more valuable over time, simply because there is a strong correlation between age and value with maturing whiskey. The market for rare and collectible whiskies as well is always growing. Many investors, should I say, do see that as a promising alternative to traditional assets, like real estate or stocks. One of the advantages of a whiskey cask investment is there is much more liquidity than bottles, and it delivers a bulk value. Now, you could potentially earn returns within 3 to 5 years of owning a young cask, but of course, storing it longer will increase its value as the age goes on. One of the main things that people really enjoy about it is whiskey cask investments are free of capital gains tax because they're classed as a wasting asset, i.e., assets with a predictable life or 50 years or less. And the storage is hassle free as well. It's typically stored in climate controlled, government bonded warehouses or directly with the distillery. So it is very hassle free for the investor.
Take us through the different types of casks, Jacob.
See, there is where it can become quite overwhelming for a new investor or someone new to the whiskey world. You've got barrels which are around 200 liters. You've got barrique casks which are around 225 liters. Hogsheads anything between 230 to 250 liters. You have butts which are 500 liters. But then you can get quite specific. You can have Madeira drums which are between 600 and 650 litres. And they're normally European oak. They're used in Madeira wine industry, but the whiskey industry will use that to age a cask and finish it, try and give it a different profile towards the end. Same with port pipes, which are the same amount of litres, but obviously for the port wine industry, and you can get a different finish, or you can have a puncheon, which is 500 litres, and it's often made with thinner staves of Spanish oak from the sherry industry, which is very popular within the whiskey world, within the cask industry, to use sherry in your cask. But then, of course, you can have new oak, European oak, American oak, and there's many choices. It does come down to often preference or resellability, what the current market needs or wants at that time.
How about the difference between new make or aged casks? Is there a benefit to either of those?
It really plays into how long you'd like your money to be invested for, the length of liquidity that you're comfortable with. As I said previously, age is a big thing in whiskey casks. If you buy new make spirit, which is something below that 3 years and 1 day old, or a young whiskey, a great point to reach before sale would be that 10-year mark. You'd have to think if this amount of time is viable, though, for the type of investment that you're looking for. Say if it's a much older cask you've bought, say 18 years, you could potentially only wait until it's around 21 years old. So 3 years before you could see a profit or return on investment that you'd be happy with. So it really, really depends on the liquidity that you'd be happy with at that point in time. Of course, with any age that you do choose, I would say that current market research and valuations is something that you would need to analyze. This is just so you can make an informed decision regarding your selected cask, as you would with any other investment you choose, which is one of the reasons why we're here, to help you with that decision as well, and help you with the information needed through Platinum Cask and Farmeye as well.
Jacob, once the investor has achieved that return of investment that they're happy with, what are the exit strategies that are available?
So for exit strategies, they're very simple. You could sell to a private investor if you know of one, or a group of people that are looking to purchase. You could sell to a wholesaler or directly back to a distillery, or you could sell via an auction. Now, there is one other choice. You could bottle it. Now, if the cask is bottled, you do have to calculate in the duty and the VAT that you will have to pay on it. If you merely choose one of the other options, that won't be an issue, and you won't need to worry about that at all.
Jacob, anything else to consider for cask investments?
Definitely so. One thing I would say is macroeconomic conditions is something you should always consider. Now, for whiskey, it could be something as simple as trade tariffs can have a significant impact on whiskey investment. For instance, the increased tariff could raise the cost of exporting the whiskey, and that potentially affect its market value and investment returns if you are looking to sell outside of the country. And then also, when investing in casks, you need to remember that your initial investment is not the only cost that you'd need to consider. You would have to include warehouse storage and insurance costs also.
Jacob, a lot to consider indeed for those cask investors. Thank you very much for your insights today.
No worries. Great to speak with you again.
And you, Jacob Carter, UK Country Head of Falmai Holdings, also manager of Whiskey Bull Auctions.